Okay, folks, just turning 1 o'clock here in Ireland, and we are going to have a little quick look at these markets ahead of what is a wall of data out of the US coming in 30 minutes. We're going to be getting building permits, core and headline PPIs, housing starts, initial jobless, fully fed manufacturing, fully fed employment, and well, I think that'll do. The key things to look out for here, of course, are PPI month on month set to come in 0.4%. 0.4%. Prior was negative 0.4. Really positive retail sales yesterday. And then fully fed manufacturing index set to come in negative 7.4, prior negative 8.9. So looking for a little easing towards the positive on that. And then the building permits for January set to come out 1.35 million. But really, yeah, do be looking at, you got to be looking at the initial jobless claims here set to come out 200,000. The Fed are going to be looking at that. They do want to see this jobless claims figure. Actually, they want to see it tick it up, unfortunately, but they're just not getting that. Anyway, PPI's month on month, the hot one here, 0.4% set to come in. Then looking at PPIs year on year, 5.4%, set to come in below the 6.2 prior. There's just going to be a lot of data coming through here. Okay, so really, you do not. I'm not going to be hitting this data on the release. I think it's going to be wild. I think generally. Soft data here is going to be good. It's going to be lapped up by the market. I think here with the S&P on the daily, we actually did see this mid channel come in here. Should I just update this here? So you can see this bull flag and that telltale sign 2 days ago coming in on the mid part of the channel and then bid up. So I think we're now gearing up for the breakout continuation on this area. Target's going to be 4207s when we get going here. So really looking to be buyer on pullbacks here on the SPOOs today. Not going to be rushing into this. Very much going to be slow playing this market, waiting till around 3:30 to look for an equities trade. You saw quite a nice bid yesterday from really a very confused market. Generally, though, the good retail sales figures coming in pretty hot, and the market loved that and bidding into new highs on the close and holding there. So we're just kind of having a lazy pullback here on S&P. If we look over, same stuff on DAX, you're probably going to see the same here on the Nasdaq. Yeah, pretty much the same. Holding on a range break high, I would say, on the Nasdaq. Yeah, there you go. There's your bull flag on the Nasdaq. Look out for 12,650s is quite a key level here. If it does break below, I don't like the longs from that level specifically. For me, I want to see things get a little bit cheap before I want to buy them. I think that might not be cheap enough, but we'll see. Let's see how the market trades out over this wall of data. On the Dow, the Dow, look, a couple of the guys in the room getting on the shorts. Let's see, around here, getting on the shorts here and here around the open and 3 o'clock, capitalizing, taking most of the profits out on this push down to here. We were looking for the bottom of this area, 38 or 33, 829s to trade. Didn't get it. That seems to be enough downside. And then BAMO up into the close, holding its head high. So we're back to test around the top of this area today. I think it's going to be interesting how far we would need to pull back here to find a bit of value. Before then we can kind of continue with the breakout further above the 34 367. I look, I'm not really giving you really focused, very eagle eye areas in and around where we're trading right now. But again, I'm going to be issuing long for the 33 829s and a hold for a break above on the Dow. And then oil, we have now rolled, I have rolled forward onto April for volume. So that is your J23 contract there for 2023 on WTI. So yeah, look, I've adjusted my gaps and whatnot here. We're still coming off a good week last week in the range. I think we're now just kind of trying to work back down here and sort of suspended somewhat by some tones coming out of Xi Jinping overnight saying that he is committed to increasing consumption in mainland China. And oil really kind of liking that, just coming into the close on the session and through APAC session. You see here pretty much coming into play there around 2 o'clock, 1 o'clock in the morning. Bid up we go, but then smack back down here. Tiny little gap in the overnight, very rapidly closed there. So yeah, there's some good notes coming out of China as towards consumption, but what's that translating onto global oil consumption at this time? You did see the Shanghai crude index up crude price up about 1.2% on the open there in Shanghai last night, but that's kind of pulled back quite a bit now. But maybe we want to take a look at that Shanghai composite crude, or not composite, the Shanghai price for crude as a little bit of a bellwether for what WTI and Brent may want to do. But for now, I don't like oil. I think we should be looking at this as skewed to the downside, before we then look to be buyer here. I really don't like it in this range. As the guys will tell you, I absolutely hate trading ranges from side to side. It's not my bag. And then one more thing before I go here, and we are 25 minutes off data. I want to take a look at bonds. So we can look at T-notes, for example, here on the daily. Now you can see this sort of a trend break occurring here for T-notes. We're seeing similar on the bond. You can get 5% on a 6-month T-bill right now. So that is pretty much as bulletproof as they get. US government backstopping your bonds. And you're going to get 5%. So if you got $1 billion, if you got $5 billion, you can probably go and get your T-bills right now, make 5% all before the end of summer. All right. So that's that little bit of advice is for free to all the billionaires tuned in here today. You can do it with a couple of grand as well. You can buy as much or as little as you want. Have a look at schwab.co.uk or schwab.com for US listeners. To be able to buy those products. But yeah, the bonds in particular, I'm really trading quite a lot of bond the last couple of weeks here and kind of sidestepping the volatility in equities. And as we've seen in the bond this morning, if I just kind of make this a wee bit bigger here, you'll see lovely, first of all, lovely longs around 8:30 from that 134 spot 72s, and then bang up into the 135.10s, which is the level we've been tracking. Unfortunately, I wasn't actually at my desk in order to capitalize on that short, which I 100% have been selling this thing the last 2 weeks. Would have been on. Probably wouldn't have been on the long, actually, because we got scrubbed out over this level overnight, but definitely would have been on this short. And you can see it did not last there. It was way too expensive. Bang, down we go into new lows on the session. New low made. So I think, look, here's the bad news. I think we can keep going down here until we get to 133.90s in the bund, and then I'll be looking for longs to come back up and kind of average pricing on the year, which is way, way, way back up at around 137.50s at the moment. So look, that's some really good stuff going on in the bonds at the moment, especially if you are actually getting a T-bill to put in your portfolio. So, but apart from that, just watch out. A wall of data in 21 minutes coming out of the US. Take care. Talk to you later.
Apollo 11, this is Houston. You are confirmed to go for orbit.